Do you feel panic and fear when your portfolio drops by 40, 50 or even 60%? You are not alone. Today we'll show you how to master your emotions and turn market pullbacks into opportunities. Watch till the end. It is a very important video to not miss. Hi, my name is Lamia, and if you are new here, welcome. Make sure to hit that subscribe button and ring the bell for notification on our latest video. In today's video, we will explore the key difference between professional traders and regular retail traders and how they manage their emotions during different market cycles. We'll also examine a chart that highlights the behavioral patterns of dumb money versus smart money. Discover how mindset can help you make rational decisions, take profit without greed, and stay calm during market volatility. Don't miss this essential guide to mastering the emotional side of trading. Now let's get started. Imagine this. Your portfolio is down by half and fear grips you. This is a common reaction among many traders. But what separates successful traders from the rest is their ability to manage these emotions. Today we'll discuss why you feel this way and how to overcome it. First, let's understand why you feel fear. Market pullbacks can trigger a fight or flight response. However, understanding your emotions is the key to making rational decisions. Professional traders, unlike retail traders, manage their emotions effectively during market cycles. Let's explore that. Here's a chart illustrating the difference between dumb money and smart money. Notice how dumb money tends to panic sell while smart money sees pullbacks as opportunities. Let's get into it. We're going to pretend everybody opened a trade right here. Let's say you're in a long trade and the price goes up. Here's what dumb money does. They're excited, and as the price moves higher, they start saying it's going to the moon. How many of you relate to this? The price goes up and very close to their take profit, and they're confident it's a winner. But then sometimes it starts dropping back down. At this point, they start thinking, I wish I took profit. And then the market is going down further and further as it gets closer to their break-even entry. They're just glad they're not in negative. And they actually build a story, so they say, okay, I'm glad I'm holding, at least I'm not negative. The market then goes down and they say, okay, I got to hold. As the market goes down further, they get frustrated, thinking I should have sold. So they are thinking up there. So this frustration continues as the price drops even more. And they feel stuck, absolutely frustrated, saying, why is this happening to me? Wondering if they should sell their position. This is the cycle of emotions: regret, frustration, and finally deciding to hold for life as this price starts moving up slowly. Now let's go back here. Sometimes it will go up and hit your take profit, and the market will keep going up. So what retail traders will say is, I'm so dumb, why didn't I hold? And then they put themselves in a box and they trap themselves into saying, that's not enough. Why didn't I hold? And this is where the retail traders fail the most. It's when they take profit and they see it going up, then they say, okay, I have to rework my strategy because I'm missing out all these pumps in the market. And this is what smart money wants you to do. Trust me, you will always fail at trading if you have this mindset. And then what happened? The market gets even higher. How many of you relate to this? Then they buy here, thinking it's going to the moon, and keep going and going. Honestly, put in the comment if you relate to this. So right after you FOMO in, the market drops back and they say, why can't I ever win? And now you have given up all the profit you made because you FOMO'd into a higher price. And this is the vicious cycle that most every new retail traders go through. And honestly, it's not derogatory. It's called a literal trading term. It's what's called dumb money. They are buying highs and selling lows, and that is the worst way to trade. Now, let's shift to what smart money does. Everyone enters the same trade at the same price point, but with different emotions. As the price moves up, smart money says, I'm just following my rules. That's what makes the difference. Smart money, they trade like robot. When it gets boring, that's where it gets profitable. The emotions of the dopamine is what's going to make you take dumb decisions. Now, they see the price getting close to their take profit and decide to take profit, even if it's not the full target. But because it's close to a big resistance, they think, I made some money, I'm taking it. This guarantees them profit, which is crucial mindset. And if the price goes higher, they say, That's okay, I guaranteed myself a profit. Now let's play the pattern down. So they exit here and then price drop. They're proud they sold and not being greedy. As the price moves down even further, they look to buy the dip, getting excited as the price drop because they see it as an opportunity. $2 cost average. They end up making money twice. Once from taking profit and again from buying the dip and the price going back up. Smart money understands that everything drops in time, so they're always looking for the best entry, while retail traders are often frustrated, feeling like they can't win. This comparison highlights the crucial difference between retail traders and smart money. Smart money trades based on a system, not emotions. They understand the bull and runs don't last forever and always look for the best entry without getting caught up in the hype. Now, let's talk strategy. To capitalize on pullbacks, you need a solid mindset. By understanding your fear and adopting a pro trader's approach, you can turn market volatility to your advantage. Thank you for watching. If you found this video helpful, please give it a thumbs up and share it. Don't forget to subscribe and hit the notification bell for more insight and tips. Let me know in the comment below how you manage your trading emotions. Until the next time, happy trading and see you in the next one.